Alright, hello and welcome to Camel Finance. I'm your boy Camel, and I've got, as you can probably see by the number of tabs, a lot to go through today. I want to point out some stuff about the Ethereum merge, which is just days away now. I want to go over the macro for inflation. So this kept me up late last night. None of it really made sense, the CPI, the market reaction, so I had to do a bit of deep dive, had to settle my mind, and I think I found the answer, so I want to share that with you. The CPI is not what it seems, and I actually think it's been misunderstood, which explains the knee-jerk reaction in the markets. I'm going to do the bullish side and the bearish side. I'm going to show you the data, which backs each one of those up. We're going to talk about rate hikes. The Bitcoin network is stronger than it's ever been. Ever. Plenty of crypto news, plenty of bullish-looking charts, an absolutely insane clip from the President of Canada. Then we're going to go over some TA, try to find some positions to put on this week before I'll leave you with a clip that had me dying of laughter. So if all that sounds interesting, stick around. I'm Camel. Let's get into it. I want to open with a joke. Bitcoin Satoshi Vision, BSV, has more lawyers than it does nodes. All right, let's get serious because this is not a laughing matter. Ethereum is only 5,000 blocks away from completing its merge, and that is roughly equivalent to 20 hours. But did you know that the top 10 Ethereum nodes control 25% of the network stake, and the top 100 control 40%? 64% of all staked ETH is controlled by 5 entities. So essentially, Ethereum has been 51% attacked. The top 9 addresses, excluding Treasury, holds around 46% of the governance power. And they can even censor your transactions if they decide they don't like you. However, this isn't really surprising, since that's exactly what you'd expect from a central bank digital currency that was going to be built on the public Ethereum chain. So I am absolutely gutted about this turn of events. I'm so disappointed and heartbroken that what was once a promising project is now simply a centralized blockchain. But we do have to remain objective, and we have to ask ourselves, what even is the point in a centralized blockchain that a small number of elite entities, elite in this case being defined as people that have an awful lot of money, what is the point in allowing these sorts of entities to be able to fork the chain at will, censor your transactions, change the government's rules? Nobody knows what the issuance schedule is because that is yet to be determined. This whole notion of a deflationary currency, it's such a small, minuscule amount of deflationary pressure that it's basically not going to be noticeable. So anyway, but this leads me into the most important point of today. This is exactly why we Bitcoin. Do not try to bend the government. That's impossible. Instead, only try to realize the truth. There is no government, only central banks and corporation. Bitcoin is the freedom. Bitcoin is the chance at separating money from state. And Bitcoin, being proof of work, is now orders of magnitude. It was always orders of magnitude better than Ethereum. But now Ethereum is essentially 51% attacked. It's owned and dominated and controlled by a very small number of people that do not have your best interests at heart. So I actually expect the Ethereum chain to get destroyed as more and more people work this out. Right now, this is you have to be quite smart, you have to be quite knowledgeable to figure this stuff out. You have to have a willingness to accept the truth, which a lot of people don't have. The merge is blinding everyone, and they think this is going to be uber bullish, and maybe it will in the short term. I'm still looking to long Ethereum in the short term from a trade point of view. But ultimately, I do believe that the more and more people start to work this out, the more and more people are going to exit their Ethereum positions into Bitcoin. Let's do the inflation now, because this really didn't make a lot of sense to me, and I was up quite late last night trying to figure this out, and I think I finally got it, so I'm going to share that with you. The US inflation is at 8.3%, 17 months after the Fed said it would be transitory. So this was ultimately the question that I was pondering last night. Can someone explain to me why a small negative difference in expected versus actual CPI value really has anything to do with the price action, aside from emotions? Well, initially I thought a high CPI print kind of tells us that everything the Fed has done till now is basically worthless. It's had no effect. They've been doing all of this hiking into a slowing economy. They've been putting all this downward pressure on markets. And ultimately, we still have high inflation, right? So that signals that either the Fed has to get way more aggressive, or it just simply is out of control. Of course, it could be a controlled demolition. And all of this is very bearish. All of this is leading, I think, to this big sort of selling cascade that we're seeing. But ultimately, I just didn't really buy this narrative. I don't think it's as bad as it is. And remember, CPI, the print for this month, was actually below that for the second time of last month. We've now had 2 back-to-back months of declining CPI whilst the core was up, I'll give you that, CPI was actually down. And even though the core was up, did it justify the S&P closing 4.3% lower in the worst day since 2020? What about Apple and Microsoft posting their biggest one-day loss since September 2020? Does this seem justified for a slight outside of expectation, for less than 0.5% outside of expectation? That didn't seem right to me either. Now the CPI is lower than last month. Inflation has topped and equities should fly. In case you didn't know the data, here it is. You can pause your video now and check that out if you want to see it. But this is what I found the deeper I dug into this. So the actual thing that threw the core CPI out the most was shelter. Shelter is unexpectedly high. And so that sounds really bad. But there's something very, very interesting about shelter. As soon as I saw this, I thought this is the missing piece to the puzzle. And this is indeed an overreaction from the market. Now, of course, it's important to point out, if we lose the lows, then I have to put my hands up and say I'm wrong. Okay, but whilst we're above the lows, then this is absolutely valid. Shelter is the thing that threw CPI out. If this wasn't as high as it was, then we would have had a shock low downside CPI print. But there's an incredibly interesting fact about shelter, and that is that it lags by almost 18 months. So this should be the last thing to come down. And then I found this, and it just kind of confirmed this theory to me. A new positive surprise, but also with firm evidence that the peak is actually in. A lot of people are going to hate this now, but the main culprit from this inflation report is the shelter costs, which weighs heavy in the CPI basket. As I just said, this is also the most lagging variable by up to about 18 months, as I also just said. So you can see here. Okay, pause your screen and take a look at that. So today's shelter costs hence hold little to no value add in terms of describing the live inflation pressure, which is better predicted by freely traded assets such as commodities. Commodity costs are down massively, and I've been going over the oil chart over and over and over again. Another thing that didn't make sense to me, how come the oil market is pricing in the peak in CPI since the lows were in the stock market 2 months ago? How come we're not seeing oil rally? It just cannot catch a bid. So this kind of answers that, right? Now let's keep going. All in all, the report is actually pretty decent confirmation that the peak is in. Let me say that again. All in all, the report is actually pretty decent confirmation that the peak is in. Headline will be below 6% year end, but the dark horse is how to get inflation back to 2%. Well, if you've been watching the channel, you'll know they're likely going to move the goalpost. That's a conversation for another day. But the point is, I think this is an overreaction, and whenever you can find an overreaction, there's the biggest opportunity. So to summarize very quickly for you, we had a CPI print which was below that of last month's, which was below that of the months before. Core is up, but only because shelter is weighing on this. But we know shelter has likely peaked because it lags 18 months, meaning we actually did get a lower CPI print. And people are just looking at the CPI print, the CPI data at face value and panic selling because they just assume that inflation is completely out of control. The Fed has absolutely no control. Nothing the Fed has done with its rate hiking has even touched inflation, and therefore we must be going down 50%. And whilst more downside is absolutely on the table, everything is on the table because these markets are absolutely crazy these days, I think an enormous opportunity to catch everyone off guard here and offside has presented itself. And all we need is a bit of confirmation in the form of a swing low or an inverse head and shoulders. I'll get to the charts in a minute. I'll show you this. All it would take is a little bit of bid, and everyone that has sold the bottom will get caught offside and forced to chase this rally higher. If you take a look at this here, there are analogs, bearish, 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 or sideways, sideways, bearish, bearish. So that sounds really bad until you realize that there's also bullish, 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 right? Here we are. Could this be what we're in for? A bit of sideways before a massive upside rally. We could be in any one of these scenarios. So to say that we're absolutely guaranteed to go down, I think is wrong-footed. Let's keep going, because there is a bearish side to this. Jurian says, there's no bull. If a 14 times forward multiple is correct valuation, then simple math tells us the fair value for the S&P 500 is between 3,200 and 3,400 at an EPS of 230. So this is suggesting the bear market is not yet over and that we need to take these lows out before we can actually find the bottom. So that's one scenario. But at the same time, the bad news for people expecting a repeat of the 70s is today's consumer is nowhere near as close to as weak as it was from 50 years ago. In other words, the chances of earnings holding up are actually very high. And then more data showing that it's incredibly hard to reach new lows with this kind of position. Everyone's already sold or short. Everyone. Okay? Like, everyone is already sold and short. Everyone is already so sure that inflation's out of control and we're going to new lows. And I'm not saying that couldn't happen, but what I am saying is, usually when you get to these levels, the market moves the other way, right? So I think there's a good chance that that's going to happen, open to being proven wrong. For now, the market says there's a 0% chance of a 50 basis point rate hike and an 18% chance of a 100 basis point rate hike. The odds of a full 1% rate hike are actually almost 30%. So you can pause your screen and take a look at this now if you want to. Powell is actually going to be very pleased with what's happened. He's going to be happy that we erased the recent squeeze. Why is that? Because the Fed does not want markets front running any kind of pivot, any kind of dovish tone. They need pain so that they can try to create the illusion of killing inflation. I would say the market had the Fed on the back foot for the last couple of months. However, the Fed has done its job and has tamed this pump. It's tamed these markets and people are now bearish again, ready to be caught offside. So in summary, there's still an awful lot to digest here. There's still an awful lot of uncertainty. There is still the possibility that earnings could put pressure on markets and that we could enter a decline that takes out the recent lows and even the prior lows. There is still downside potential. However, the CPI data shows that it is nowhere near as bad as the market reaction was yesterday. The CPI has indeed peaked for 2 months and is cooling off for 2 consecutive months. Whilst core CPI is high, it's because of a skew from shelter, which lags 18 months and has most likely topped. It's just we haven't seen that come into the basket yet. Shelter is so heavily weighted in the CPI calculation. It's far too early to draw any conclusions. And to be clear, I'm not saying we have to go up. I'm also not saying we have to go down. Nobody really knows for now. But what you can tell straight away is the pros from the rookies. The pros will admit they don't know. They are waiting for the charts to develop. They are waiting for technical breakdowns to short, not just selling now. They're waiting for technical confirmation. And similarly, they're also waiting for technical breakouts to occur before they enter longs. They're not just guessing the bottoms in, trying to catch a falling knife. There's huge opportunity here, whichever way the market goes. So it's important to stay unbiased, neutral, and ready to trade either direction. Bitcoin doesn't care. The price action may well have taken a bit of a pullback, but the fundamentals continue to get stronger and stronger every day. We have a new network capacity record high for the Lightning Network. At the same time, Bitcoin's mining difficulty just hit a new all-time high. The miners now need to perform 32 trillion hashes to find a new block. The network has never ever been this secure. Coinbase, though, has said that trades are intermittently failing, so something to be aware of if you trade via Coinbase. Nigel Farage has been announced as a Bitcoin Amsterdam speaker. He is an ex-commodity trader at the London Metals Exchange. Russia's Prime Minister has asked regulators to finalize the regulations for cross-border crypto payments. So we are about to see enormous flows into the Bitcoin network. At the same time, the banking giants Fidelity, Charles Schwab, and Citadel have launched a Bitcoin and crypto exchange. This is going to allow even more money to flow into the Bitcoin network. The Central Bank of Bahrain is going to test Bitcoin payments through OpenNode. Are you seeing the pattern here? We are incredibly close to a bull run, incredibly close to enormous inflows into Bitcoin. The charts are telling us that we're soon going to break out like we did before and target the 6-figure Bitcoin. More technicals point to the same thing. You don't have to make it complicated. Buy signal with the RSI, sell signal with the RSI. You can see what's happened here, okay? We've already had the buy signal. There's nothing to say this low has to hold, but what this does is it speaks to probability that the lows are indeed in. A lot has to go wrong. This would be the first time ever these sorts of signals didn't work if we take out the lows. So whilst everyone is bearish, whilst the CPI print sounded bad at face value, a lot has to go wrong. You're asking a lot of the chart to break these lows because you're asking every single bottom indicator that's flashed at these recent lows to just be worthless for the first time in their lives, which they never have been before, right? Bitcoin halving cycles with hype waves. You can see these line up incredibly well. There's no reason that this low has to be taken out. Could it? Yes. But could it also just range sideways into the end of the year before it goes? Absolutely. Keep in mind, there's 56 million millionaires in this planet. 56 million millionaires exist. There's not even enough for them to have half a Bitcoin each. Okay? There's not even enough for each millionaire to decide, I want to have half a Bitcoin. Remember, the governments do not want you to own this stuff. And this clip, just no words. Look at this.
Telling people they can opt out of inflation by investing their savings in volatile cryptocurrencies is not responsible leadership.
Yeah, he really said that. He really said that. The Dixie, huge bearish divergence. The uptrend is losing momentum. Here, we have not yet made a higher high, so we will see how this plays out. Bitcoin catching a little bit of a bounce, so this is not completely wrecked just yet. I'm actually thinking of buying this dip. I do want to see a little bit more strength. This is not a buyable entry for me, but if the price action can start to get a big candle coming out of here, or potentially one more move down that goes, then that will be a long. I'm actually looking to buy this dip, and I'm slowly formulating a big plan to take advantage of what I believe will be the last cycle low of this bear market due on the 11th of November. So that's going to involve taking multiple leverage positions, including things like Coinbase and MicroStrategy. So we're getting dangerously close, only a couple of months away from that. Ethereum as well, look, holding up. Maybe we can come down just a little bit more. So again, I want to see a little bit more strength from this before I can entertain a long, but I am indeed looking for longs. If we lose this low back here, then shorts become a thing. And the same is true for Bitcoin. If we were to lose this low, then shorts become a thing, but I actually don't think we will. So a big drop down coming off of yesterday. However, if you go back and watch the videos, go back and watch them from when we were on these candles here. So how many days ago? You know, 4 days ago, 5 days ago. If you go back and watch those videos, I was saying that maybe we have a cycle low in place, and maybe that's still the case today. However, I was saying that it would be nice to see a drop down into a retest or into a later cycle low. And if you count the days from here, could this be a perfect day 42 cycle low? Now, usually the perfect 42 cycle low would be below this low. So maybe there's a little bit more downside to undercut that. But I think this is a perfect long. I actually think this is a perfect long opportunity coming up. And I just want to see a little bit of strength before I will be putting this risk on. So, of course, invalidation would come if we get another one of these big red candles that forms here. If we start to just plummet towards the lows back here, then I will accept defeat and say that we're looking for shorts. But for now, I think this dip is buyable. Just a little bit more patience. Let the market tell me that I'm right in this thesis. And then I think we can entertain longs. Similarly for the NASDAQ, still above these lows. Is this just a nice little double bottom? Or can we line up a bounce out of here with a relatively small risk like this? Or if that doesn't work, and if this bounce is for real, then you would expect this to come up here and break this trend line. So maybe we can entertain some longs from here. Again, just a little bit more patience. Let the market tell me. I'm not trying to guess anything, and I'm open to both sides. But I don't think, you know, is this complete structural damage? No, it's not. I don't think this is the end of the world, at least not yet. The VIX as well got a decent spike, but look, this is just breakdown, retest. Is it now resuming down? Quite possibly. Again, if this starts to spike up, then that will be happening because this S&P is pulling down very rapidly. But I just don't think that this is anything to be too concerned about now. Again, I'm open to being proven wrong, but I haven't been proven wrong just yet. Real, breakout, retest, looking for that resumption. Can we get it? I don't know, but we'll continue to push this trade and see what we can get. Here's oil. This is what I was saying earlier in the video. Oil is refusing to catch a bid. So currently fighting for its life at this level, but is it going to lose this level and make its way down to a 60, 65 handle? Quite possibly. So if this starts to rally, then that could tell us that the market is pricing in continued inflation, but we're not seeing that at this moment in time. Gold as well, weak price action, but look at it. It's still above the lows. It's still hanging in there. So it is what it is. Not much we can do. Just continue to push that. Silver. Is silver going to do what I said a couple of days ago, which was it would chop around in here before breaking out? You know, that would be incredibly bullish in my opinion. And hopefully the miners can follow. So we've had this breakout retest looking for a resumption. This is a big horizontal level here. If silver continues to hold up okay, then I would expect the miners to do okay as well. So we will continue to push these trades and see what we can get from the market. 10-year yields look to be breaking out. Big question is, can we get above this level here, or can we put in a double top? That remains to be seen. This is obviously going to put pressure on risk assets. Take a quick look at the futures. Future's ticking green. So, bear flag, potentially, or did everyone just get their stops ran yesterday, which again was called ahead of time on this channel. I warned people there would be Darth Maul wicks and there would be market maker games and stop hunting. Is that what we saw? Quite possibly. If you found value here today, I'd appreciate if you could drop a like on the video, subscribe if you're not already, throw something down in the comments, let me know how you're feeling, let me know if you think I'm way off, let me know if you think that potentially there's alpha here, potentially the dips are buyable. If you think I'm absolutely off my nut, if you think I've missed something completely, then throw that down in the comments. I'd love to hear it. And lastly, I'm going to leave you with this clip. Enjoy.
Y me llama el cocinero. Risita, ¿qué? Ve por la paellera. Venga, que las 2 de la tarde ya están aquí. Miren, bañador. En las chanclas. Todo despeinado porque no me dio tiempo nada ponerme las chanclas y el bañador. Voy a la playa, había subido la marea. Jesús. Jesús. Había subido la marea y encontré una paella. Y la encontré porque estaba la paellera agarrada metida entre las piedras de Chipiona, del faro. Y cuando entro en el restaurante me ve el cocinero con una paellera y adentro la vende paellera.